Why a 3x rally doesn't crush sellers?
Why a 3x doesn't?
Why is the 3 times rally doesn't crush sellers? And when by 3 times rally, are you talking about? We're talking about like 3 times the expected move, right?
That is correct.
Let's go here, John.
Let's do it to it.
With Palantir and Robinhood up 109 and 195% respectively since January 1st, we're curious to see how the results of selling out of the money calls were affected by these large moves. Typically, 109% move and 195% move would see a lot of calls being tested. Yeah, I think so. Mm-hmm. But let's see what happened with both specifically. They can find a way that this didn't lose money, I'd be shocked. Let's go next slide. So we looked at Palantir and Hood, January 2025 to present, 45-day options, recorded the win rate and max loss as a multiple of credit received. We're selling short 20 delta calls. Okay, I'm a short 20 delta call guy.
Mm-hmm. Mm-hmm. You like living that.
Short 20 delta calls and short 20 delta calls and puts. Managed them at 21 days and then redeployed to a short call closest to 45 days.
That's your mechanics.
My mechanics. Let's go next slide.
And they went to these stocks because they had those kind of moves. That's what they're looking at.
Yeah.
Right? You had to find the stocks that had that.
Yeah, we had to find stocks that had over 100% move in 2025. So in 2025, short calls were not profitable strategies so far, obviously. Mm-hmm. With a win rate of 45% in Hood and 56% in Palantir. However, the magnitude of the worst loss is actually quite reasonable from the context that the underlying almost tripled in 8 months. Let's take a look at what the market expects to happen in Palantir going forward. So hold on a second. Go back a slide, John, for 1 second. Go back to 2, can you? No, 3, I'm sorry. Okay. Let's take a look. So short 20 delta calls match 21 days, 2025 to present. Palantir, 57% win rate. Hood, 45% win rate. But the win rate doesn't mean anything. So the max loss is a multiple of credit received, 10x and 8x. Okay. Not good. Mm-hmm. Let's go next slide. Adding a short put to your already short call reduced the max loss as a multiple of credit to just over 2.5%. Okay, that makes a lot of sense. This attests to the best way to reduce the effect of outlier losses over time is to add the other side because only one side loses per trade. So it's not. It's kind of a little bit of masters of the obvious, but what the team did here is show you that by adding a short put at 20 deltas to your already short call, your win rate went from 54 to 65 and from 45 to 50, okay? But your max loss as a multiple of the credit received went from 10x and 8x to 4x and 3x.
Much better.
Much, much better. Okay, so the first takeaway from this is we always say, if we're going to do the call, we might as well do the call and the put.
Sure.
And this is a takeaway that shows why we do that. Okay, that's number one. Let's go next slide. So taking a look at what the market was pricing in Hood and PLTR before the up move in 2025, and the current option skew, we see that there's already a huge implied move in both for a while. So the current IV is even higher with 20 delta options skewed heavily to the call side. This is probably, again, master of the obvious here. Mm-hmm. Biggest up move over 45 days, biggest down move over 45 days, current 20 delta strike distance, and current 20 delta put distance. I don't think that anybody would be shocked by the size of the skew.
Not at all.
I'm not. Let's go next slide. The results from selling options in PLTR and Hood, as well as many underlying are never based on how much the underlying moves by itself, but rather how much it moved relative to what the market already priced in. So in the case of PLTR, what seems like a huge move was actually partially expected since the IV was trading in the 80s and some in the hundreds in 2025. Going forward, the recent explosion to the upside is now taking even more into account, with short calls having a 20% buffer between now and expiration. That is that's interesting.
Yeah, I would say that's interesting. I agree with you.
I'm not sure that they made the case why a 3x rally didn't crush sellers.
Right, because it's going to hurt.
Yeah.
I was wondering where they were going with this.
Yeah, I don't think they made the case. Just going to buy back those futures now that we just sold. But let's go to the next slide.
You're going to attempt.
I'm going to attempt. Short positions, PLTR and Hood, were tested significantly in 2025, but the losses were within expectations given the substantial market moves that were already anticipated for both stocks. Wherever there's a large move in an underlying, the market always prices options to their new potential exposure, meaning the premium must always be justified for the risk the underlying carries. I think what the team's saying here is that although these positions lost money, the losses were not outlier losses.
Sure, not game changer kind of things that push.
If you just sold naked calls, the losses were outliers. If you sold the calls and the puts, the losses were within the range. So it's a little misleading. Why a 3x rally didn't crush sellers? It didn't help them, but it was inside the range of an expected loss. If you're going to lose, it was inside the range. And the second piece of this is whenever stocks like Palantir and Hood have these huge moves, then the future, everything's priced in more effectively than it was last time.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.